Mr. Okezie, I know that for some time now, the regulators, the management of the exchange, have been trying to come up with so many measures.
Yeah, those policies have not even helped us. They have tried.
Well, we know that
the
recent
exchange have been tried a lot, than even the apex regulator itself.
Right.
But those things are just geared towards moving the market, but we are not getting it there.
Right. Well, let's look at the most recent. Remember last week, the federal government announced the exemption of VAT on transaction, and you talked about way of encouraging local investors to actually come into the market. Isn't that, I mean, good news for you as a shareholder? Isn't that encouraging for you as a shareholder?
Yeah, a welcome development, because if you're taking that VAT away from them, because what's killing company in Nigeria is multi-taxation policy. We don't have policy on taxation. This company will provide access road going to their premises, whereby they will provide boreholes, electricity, 24 hours to run their company. Now, if you're coming here today, if Chinese is a listed company, they change, and they will pay tax, profit after tax, they pay to the government. And you now begin to do everything China do, VAT. What is the benefit of VAT to those people who are paying it? We don't see the impact on the life of ordinary Nigerians. And eventually everything, because when you buy or sell, every transaction that took place in the floor stock exchange, SEC take their own, CSC take their own, exchange take their own. Yes, exchange can take, to maintain the place, the platform where the traders have been trading on those inequities. They pay salaries. I have no quarrel over that, But those people doing nothing, they're collecting the money. So when you buy, you sell, you pay VAT. What's the sense of it? And the dividend, don't forget, that 10% will go tax on every dividend accrued to shareholders. And the same thing goes to the government, it's a tax. So what do we go from there? So it's a welcome development to encourage investors to stay into the market instead of, overtaxing them, killing them, by this taxation. It's a welcome development. Those coming late. Because we have cried for all along.
But it's better late than never.
Yeah, it's better than never.
Well, Mr. Chukwu, you're itching to say something. You don't seem to agree with what he has said here. I mean, if NSC has the right to take some percentage out of, I mean, the Securities and Exchange Commission, they also run their own organization. The CSCS, they also run their own organization.
They're fighting to collect subvention from government. There is no justification.
Mr. Chukwu, I want you to comment.
It was the former DG that paved that way for them to collecting that 0.3%, or to develop market, to carry out enlightenment education to the investors, and what they're not doing.
Right,
for me,
Mr. Okezie,
there's no justification for them to pack that money.
Mr. Okezie, you have to allow Mr. Chukwu make a comment here.
Yes, I'll allow him. But it's hurt me, I'm the market.
I know.
Okay, well, basically what I would say is that the federal government, in the objective of removing the VAT on tax on transactions on the floor of the stock exchange, is to reduce the transaction costs to operators, both investors and the operators. Well, basically what happens is that when you buy or when you sell, you pay your, in case of buying, you pay your CSCS, in case of buying, you pay your SEC 0.3%. And then when you are selling, you pay 0.3% to CSCS and 0.3% to NSC. And then there are VAT on those payments, apart from the VAT that you also pay on the commission you pay to your broker. So at the end of the day, what the government has done is to reduce the transaction cost on the buy and sell. On the buy side, they reduce the transaction cost by 0.068%. And then on the sell side, they reduce the transaction cost by 0.098%. So in effect, they have effectively reduced the transaction cost by 0.166%. What that is supposed to mean is that when you do transactions on the exchange, the cost of executing those transactions become cheaper, and therefore that should encourage people to do more transactions on the exchange. Well, as good as that is, it is not the driving factor for people to invest in the exchange. The major compelling driving factor is that you're looking for capital gain, and if the prospects of capital gain is not very high or is dim, then the fact that you're going to bear low transaction costs will not necessarily drive you to go and invest if there's a prospect that you will lose your capital. Yeah. And that's why that we're not seeing a rally in the market as a result of reduction in cost. It's good that we have a reduced transaction cost, but it does not drive investors to invest in the market, because investors cannot go to the market when you see a bear run and you think if you go in today, the price will drop further and then your capital will be eroded.
Yeah, but some analysts will tell you that, in fact, now the prices are dropping. That is the right time to go into the market.
If you have the cash, and you must watch some of those companies that have prospect, that has future, you begin to invest in them. Because by the time those prices are higher, you can able to meet up, to move in. You take advantage of the lower price, that company has prospect, that company will be rewarded, that company has a corporate governance, instituted entrenched in those companies, you move in. That is how you make the money. Okay, you take advantage of low price, you move in, queue in. But the problem is finance. They don't have liquidity.
All right, Mr. Okezie. Well, Mr. Chukwu, the press statement released by the exchange says that the exemption is effective for a period of 5 years. I'm wondering what that means.
Well, it means that it's just a tax holiday. What that means, when you talk about tax holiday, is that the government can use fiscal instrument in form of tax to stimulate a sector of the economy. And I think the objective is that they want to engender more investment into the market. They want to engender more participation in the market because they want to reduce. They are trying to reduce the transaction costs. So what that means is that in the next 5 years, their projection of the market would have grown so big that that incentive will no longer be counted as incentive, will no longer be necessary.
And then they go back to it.
The tax will be restored. It's just like what you have, what you call tax relief or pioneer status. In the case of pioneer status, if a company goes to set up a business in an area the government wants to stimulate, the government could waive taxes for 3 years. So in this instance, the government is waiving taxes to stimulate, to lower the cost of transaction and stimulate more investment participation in the market. And it's believed that in the next 5 years, probably the market will be talking of $1 trillion as the Nigerian Stock Exchange is projecting. And at that point, it will no longer be necessary to maintain that tax waiver. And that's what they mean that it's going to be for 5 years.
All right. Another recent step taken by the exchange, just yesterday, they launched what they call the corporate governance and rating system. So one would wonder, okay, looking at the trend in the market now, the bearish mode, and of course, Mr. Okezie said that local investors are not encouraged. So I'm wondering how this corporate governance rating system is actually going to help restore confidence in the investors.
Well, basically what happens is that investors want to invest in companies who they can rely on their published accounts, and that's why they introduced the IFRS on all quoted companies. 2, the investors want to be sure that companies are run in the most ethical manner, in the most effective manner, and that when you have strong corporate governance, that means there are checks and balances. The key major shareholder does not have to run right roughshod over this minority shareholders. And when companies are known to practice the best corporate governance standards, it then encourages investors to take positions in those companies, knowing fully well that, look, or having this confidence that the company will report actual performance and that the performance of the company is not creamed out. You know, there are several ways the core investors can actually cream out the performance of the company, and then the company will end up reporting losses or very minor performance. For instance, if they load the operating costs, or they are the one providing the service, a cost service to the company, and then that service takes up most of the income of the company, then you can find out that the rest of the shareholder will be sharing little of what the company has done. But if you have strong corporate governance, which is why the rating system is very good, a rating system will actually show that these companies have the best of the standards. And the companies that have the best of the standards, investors will want to take position in those companies, because that is a measure that the company's performance is actually reflected in its P&L, and the investors can partake in forms of dividend or other returns from sharing from that company's performance.
Right, Mr. Okezie, that of course should actually encourage you and other shareholders or investors to actually come back into the market, isn't it?
Well, I've told them, the CBI, that's the body promoting this so-called rating, must be independent, free from any interference from the NSC. Because we've seen in this country where the people who are regulating us, the financial sector, goes abroad, they got award. Whereas, they are home, they are not even put their home in order. They got award. I begin to wonder, why are they getting this award? What criteria for this award given to them? We're seeing in so magazines, phobia, So what have you? So in the so-called whatever they regulate, it's not justification getting those awards because they have messed up the system. Now, if you're bringing this kind of rating, okay, it must be independent. Then the shareholders' input must be sought. Because I was hearing the guy talking about, civil society coalition, how many of them attend AGM? Because we are in a position to say this company is doing well. Because when it comes to AGMs, how many people have been allowed to exercise their freedom to speak on their company that can run for 360 days? And it's left you to speak. So this is not corporate governance. All right. Like you're talking about, technical fees for a foreign company. You provide, even Nigerians today are creating some technical fees. So every profit you make, we go there. And nothing left to be shared. So these are corporate governance. Annual report, how do you post?
Mr. Okezie, let's take some of the
These are corporate governance. And if those things are not there,
let's take
don't
some
tell
of
me
the
that, because somebody has paid money and you now rating that person,
right,
I'm not going to accept that.